Good morning, everyone. Today is Tuesday, the 21st of January 2020. I thought it would be good to give you an insight into the technical analysis that we do to help our clients. I did mention in my video yesterday that I'd try and get some technical analysis done for you guys. So let's get into it. First and foremost, I should make a disclaimer. We're not an advisory brokerage. We don't ever tell clients when to buy or when to sell their currency. We simply help them to make informed decisions with the use of our technical analysis. And we also marry that with some really good fundamental analysis that we get from our liquidity provider, eBri, who are one of the top-ranked Bloomberg forecasters. So the fundamental analysis that they provide for us is very accurate. We pass that on to our clients, and as I say, we marry that then with the technical analysis that we do ourselves, and that tends to add a great deal of value to our clients in terms of their decision-making process when they're looking to buy or sell their currency. So right, now that I've got that little disclaimer out of the way, let's get into the actual analysis. So what I've got on screen for you this morning is a chart of the pound versus the dollar. This is from a monthly time frame that we're looking at, and what we can see is essentially since sort of mid 2013, the market has been trending down. It's been in a downtrend, and we've got that sort of encased in a channel, as you can see. Now what has happened very recently is we've come down to all-time historic lows for the pound versus the dollar, which was around 119, 120 levels. We made what is essentially a double bottom. So there's the first bottom. We came to the bottom of our channel, which was in line with historic lows, and then again around August of last year we came again to these historic lows and found support in this region, which created a nice double bottom for us. A double bottom usually signals that there's some upside momentum to come. It usually signals that there is support in the market. Not always, but it we use it as a guide to help us understand what's likely to come next. So when we did find support here around the 119, 120 levels, for the next 5 months we then proceeded to rally, and last year in December, after a 5-month rally, we actually broke out above our descending channel, as you can see here with this candle. So we broke out of this channel. Now January 2020, what we can see is that the market is coming back to test the top of our channel, which is something that commonly happens when you see a breakout. You will then have a retest. So we are cautiously optimistic that the strength of the pound will continue to appreciate, and that this is possibly just a retest before we do rally and see some more higher prices. So if I can bring you down to a more granular time frame, if we go down to the daily time frame, I'll just zoom out a little bit here. So here's another double bottom from a daily perspective. This is when we came to the all-time lows again. We made a nice double bottom. As you can see, after that double bottom, we then started to build some momentum, a little bit of a retest, a sharp push up. We then consolidated sideways between some key levels that we had plotted. Just to take a step back quickly, so on the way up from this double bottom, we were looking at certain key levels: 122, where the market found support, 126, where again we found support, 128, where you can see a couple of bottoms there where we found support, 130, which acted as resistance initially. We kept sort of bumping our heads and heading back down, and then beginning of December, uh, just like a week before the election, we actually broke up and out of the descending macro channel that we'd been encased in for the past 6 years. And then this candle here, this quite large candle, was the actual election night candle. So in major events like this, you will see in some cases a lot of over exuberance, as happened in this case, and sometimes it can go the other way and you see over pessimistic trading, where you'd have a a rather large red candle instead. So on election night, we had the market shoot up to 135, which was then followed sharply by a rather significant pushback down. This, we would say, was due to a lot of profit taking. So once the market spiked up to 135, there were a lot of people that made some good money, and they wanted to realize their profits. So whilst they were taking profit, investors and traders, whilst they were taking their money out of the market then started to decline. We came back to the top of our channel here, and we found some support, and we bounced straight back out of the channel, which was a positive sign for the pound. Since then, a little bit more profit taking, married with the tensions that we saw with the US and Iran, which actually meant that there were quite a lot of flows into safe havens. The dollar is one of those safe havens, along with the yen, the Swiss franc, gold. So we started to see the pound suffer a little bit. Those tensions then started to ease, and the market has subsequently found support at our pre-identified support level of 130. So we bounced up from 130. We came back and tested it again. Yesterday we fell below. I'll try and zoom in a little bit. Yesterday we fell below, but then we closed back up exactly around 130. And then today we can see we're having a rather nice push up. This is partly being fueled by the economic data that was released this morning at 9:30, which was on the employment numbers. So we actually beat estimates. The forecasted number for employment was around 109,000. We actually came in at 208,000. The unemployment numbers remained unchanged. So this has helped to buoy the strength of the pound this morning, and we're seeing some decent flows into the pound by investors and traders. As I mentioned, we're cautiously optimistic that if we stay above 130, and if we stay above this channel, then we would expect to see higher prices ahead for the pound, short to medium term at least. The levels that we have that we'd be looking at is probably around 132, 133 as the next test, to see if we can get above that area, and then probably around 135. If we can break above 133, 135, then it's possible that we may go back to as high as 140, 144, which is where we sold off from what's this, April 2018, the last time we bumped our head at the top of our channel. So once we can get back above sort of 135, then it would be possible for us to get back up to these regions. Also, something that we've noticed very recently, and I'll draw this on for you very quickly, is since November of last year, we've been able to sort of plot some support on the underside of the market. So every time the market has come down to these levels, or down to this line I should say, we've been making higher lows, which is a positive sign. But what has also happened very recently is we have now started to make some lower highs, which means that we are caught in a little bit of a wedge, and we're hoping that the market breaks out to the upside, which would be a positive sign because we're above 130, we're above our channel, and now we'd be breaking out of this newly identified wedge, and that would all signal further strength ahead for the pound. This is obviously great news for importers. It means that, you know, there may be possible upside to take advantage of. Not so great for exporters. If you're sitting on a pile of dollars, you might want to start considering your options on what you're doing about that. Obviously, you know, we don't have a crystal ball. There's no guarantees that the market is going to just suddenly shoot up and continue to go up. It could fall back within you know, our channel as a false breakout and head back down. But I'd say to exporters, you definitely want to be mindful. The way that the market is acting at the moment, it certainly seems to us as there's more support to the upside. So in terms of importers, if you're looking for, you know, just absolute certainty, then you can certainly go ahead and possibly look at some forward options, some forward contracts, sorry. And you know, the market is quite favorably priced. If you're just looking for certainty, you can sort of protect, you know, your profit margins going out for the next 3, 6, 12 months, whatever you've got in mind. If you're a little bit less averse to risk, then you might want to take advantage of some of the potential upside, and you can start to think about maybe layering some forwards. So for example, if we get up to 133, you might want to you know, cover maybe 20-25% of your exposure. I don't know, maybe that could last you maybe 3-6 months perhaps, and then, you know, as we get up to 135, you can do the same thing again, another you know, 20-25% of your exposure, which will see you out for another 3 to 6 months. And what you'd be doing by doing that is you know, increasing your average price as the market moves in your favor, which is always a good thing. Or you can just, as the market moves in your favor, just buy at the prevailing spot price, and take advantage that way. So completely up to you. So that's our analysis for the pound versus the dollar. I'll show you the pound versus the euro very quickly. So this again is a monthly chart that we have here. This big red candle is the referendum when we decided to leave Europe. Since then we have been encased in a wedge. So here's the top side of that wedge, here is the underside of that wedge, which has been respective up until sort of, what was this, mid July of last year. We did break out, however the following month we had a reversal candle, and the month after that we then broke back up into the wedge. From this reversal candle here, low of 107.22, we then had a 5-month rally, which again culminated in a breakout above the top of our wedge in December of 2019. Similarly, the market has come to test the top of that wedge. We're operating, as you can see, above that wedge and above 117, which we believe is crucial for sustained momentum to continue. And if we go down to the daily time frame, I'll just scroll across, make that a bit bigger. So leading up to December, we can see we started to poke our head above the top of the wedge, and similarly to the pound versus the dollar, the week before the election, we spiked above this wedge, and then there is your election day / night candle, we shot up to around just shy of 121. Again, profit taken by investors and traders saw the market fall back to around the top of our wedge. We've since come and made a double bottom, which, as I explained earlier, sort of signals there is support in the market. That double bottom is around 116.50 area, 116.50-ish. So we've spiked out again of the wedge, and what we've started to do is we've started to create a smaller wedge, which I've identified by these two black lines here. So we're seeing some lower highs forming on the top side, and we've got the double bottom on the bottom side. As I mentioned, the fact that we are above, the macro wedge is positive, and we're expecting possibly a breakout of the top side of this wedge with the positive economic data that was released this morning. So we'll have to wait and see if we do get that breakout today, or maybe at some stage later on this week. So we'll be watching that very closely. If we do get that breakout, again, it would be very positive for importers and suggest there are higher prices, and that the strength of the pound will continue to appreciate. Conversely, if we do fall away from here, the sort of 117.60, 117.80 area, and we come back below this macro wedge, then it would sort of put maybe lower price targets into the mix again, and on the cards again. So key levels to watch will probably be this low here of around 116.50 first and foremost, and then probably, I know it's not plotted on here, but 115 has been a very strong resistance and support level for the market over the past year. I can probably zoom out and get to 115, so we can see sort of a lot of touches around the 115 area, sort of there, and then acted as support there. So 115 will be a crucial number. If we can break below that, then we'd probably be looking at maybe 114 and possibly a retest of the bottom of our wedge. As I said, though, we're probably leaning more 60 to 70% towards the upside. So we are expecting to see the market remain above 117 and to remain above the macro wedge. And as I say, possibly by the end of this week we'll have broken out of the this smaller wedge that we've formed recently. So I think I'll wrap it up there, guys. I don't want to go on for too much longer. It's been quite a long video. So that's some of the analysis that we give to our clients to keep them informed and to help them with their decision making. I hope you found it valuable. I will try to do some of this sort of analysis maybe once every not necessarily once every week, maybe once every couple of weeks when I get a chance, and it will help to show you guys how we could also help you, for any business owners out there, finance directors, MDs, CEOs. If you're not getting this type of service from your bank or from your broker that you're using, and you find this intriguing, we'd love to have a chat with you, find out a little bit about how you like to work, what your objectives are for the year ahead, and perhaps we can work together and start to build some relationships together. All of my contact details are in the on the LinkedIn post if you would like to get in contact with me. And until next time, I wish everyone a fantastic week, and speak soon. Take care, guys.